We're joined by Melissa Cohn, who is the William Raveis Mortgage Regional Vice President. Great to have you here with us today, Melissa. First,
thanks so much.
Yes, absolutely. So you just heard the breakdown of where we're hovering right now, still around that 7% marker. Does the buyer sentiment change at all at this level? And if so, where could we see some potential bids be thrown into the ring?
I mean, psychologically, I think people want to see rates well below 7%. Real estate values have remained quite high, even though they've dropped a little bit recently. That, as you said, the affordability factor becomes an issue. I think that when interest rates drop below 7, if we get them down to 6.75, 6.625, maybe 6.5%, that we'll see, renewed interest in the home buyers coming into the marketplace. And the other thing that we have to take into consideration is, when is the Fed going to start cutting rates? It's the spring selling season. Do people want to buy now, know that they're taking a higher interest rate, but having the ability to refinance at some point, hopefully in the next 12 to 24 months, in order to be able to reduce their monthly payment? Because it really is all about the monthly payment and not about the print rate.
Now, yesterday, we had Doug Duncan, who's Freddie Mac's chief economist here. I asked him his thoughts on buying now versus waiting for rates to decline. I would love to hear your reaction to what he said on the other side. Let's take a listen.
So if at today's price and the amount of money that you'd have to borrow, the payment fits in your budget that you have, then you buy today, you're a homeowner. If you're speculating on whether interest rates are going to fall, whether prices are going to fall.
And now banking on refinancing.
Yeah, but then you've moved into the realm of being a speculator.
Right.
Some people can afford that. A lot of entry-level buyers can't really afford that.
And Melissa, I want to get your reaction to that as well here, especially as there could be those who are tempted to speculate right now.
I think that really it's all about, affordability and whether or not you need to buy a home. I mean, the American dream is that everyone becomes a homeowner. And it is, I believe, quite likely that when interest rates come down, that more buyers will come into the marketplace and real estate prices will move upward. So to be able to buy today, and if you can afford to buy today and become a homeowner, obviously we all hope that interest rates will come down, but I don't really think that makes you a speculator in the market.
For a lot of new home buyers out there, what are the things that they need to remember, especially if going into a market like this and trying to figure out where they're going to get the best bang for their buck long term?
Well, I think that they have to look at themselves financially first. Where do they stand in terms of their career, in terms of income? Is their income stable? If they can afford to qualify for a mortgage today and they know that their income is growing, even if rates were not to go down, then as their income grows, that the affordability factor for them will improve. It's also a question of, are you buying something just to get into it today? Like, people shouldn't settle on something that's less expensive in order just to have a lower monthly payment if you're buying something that you're not going to see yourself in for a very long period of time. Because there are transaction costs. You have to pay broker's commissions, there are closing costs, transfer taxes that you have to pay. So you have to make sure that the decision to buy today is a prudent one and one that will withstand, the next 2 or 3 years. So to make sure that you haven't really thrown money out the window.
Are some of those costs making new homes more appealing for new home buyers?
Well, I mean, if someone's purchasing a new home, there are builders who will actually give people discounts on their closing costs and discounts on rates, which is obviously an advantage. Closing costs vary by state to state. There are certain states where closing costs are a lot less expensive and other states where it's a lot more expensive. So you have to take not only the purchase price and the mortgage, but all of your closing costs into consideration. Banks will want to see that you have enough money for your down payment, that you have enough money for closing costs, and that you have some money in reserve. Banks today have become prudent. Banks are not throwing out no income verification loans and telling people, oh, you should just buy now and worry about it later. Banks are really trying to make sure that every mortgage they make is one for the buyer that's going to be able to make their monthly payments.
Certainly. Melissa Cohn, who is the William Raveis Mortgage Regional Vice President, thanks so much for taking the time here with us today.
My pleasure.